I was just taking a look at the Indian market chart, and since peaking in early October, and I mean it was a meteoric rise at some point there, like it felt like the Indian market could just do no wrong, and it really wasn't feeling gravity at all. It's felt a heck of a lot of gravity since early October, and it's firmly in correction territory, only about 5% away from bear market territory. What's gone wrong?
I think there are a couple of things. Now, firstly, the economic growth has actually slowed this year. We do think that India will probably post growth of about 6.2 to 6.3%. Secondly, earnings growth for the companies is also coming off. We're looking at basically the low double digits, probably in the range of about 13 to 14%. And on top of that, India actually has one of the biggest, heaviest duties imposed on American imports. And so we do think that with the trade deficit as well, India is probably in the target range of the Trump administration when it comes to tariffs. And that's one of the reasons why, Prime Minister Modi has actually reacted very quickly in going to Washington, meeting with Trump and trying to actually assuage American concerns with regards to, the sizable trade deficit. And I think if you put all that together, you can probably understand why foreign institutions have actually been taking profit off India and selling out of India since, I would say, August, July last year.
But with the announcement today of all the chummy reciprocal arrangements, cooperations, promises of sales, to India of oil and gas and, nuclear technology, et cetera, won't that go some way to easing the pressure on what you say is India in the target range of tariffs?
Yeah. I think it might ease some of the pressure, but I don't think India is getting away scot-free, so to speak. I do think that once they do the reviews and come 1st of April, I do think that there could potentially be some tariffs imposed on India as well. But the impact is not as great because of the fact that India overall is still a net consumer-oriented economy. In the past, in 2017, 2018, the Indian rupee was one of the better performing currencies, and the Indian equities market was one of the better performing equities market when the trade war between China and the US actually escalated. But at that point in time, India was not included in the tariff war. But now India is probably likely to be included as a package as well. And that's one of the reasons why India is really not performing at the moment.
Yeah, I mean, right now nobody can escape, right? Would you agree that in this kind of environment, right, which is pretty clearly inflationary, right, you're going to want to be in bonds?
You're going to want to be in gold, actually, I think. And gold prices have actually done really, really well. And I think last week, the Chinese PBOC have actually allowed 10 insurance companies to invest as much as 1% of their assets in gold bullion. And I think given that demand and the fact that there's been a lot of demand for gold, for paper gold as well, that gold prices are likely to break the $3,000 per ounce level easily. So I think the demand for gold has actually been very strong, given the fact that, it's clearly an inflation hedge.
Especially so for COMEX gold, no? I mean, physical gold, right? And this is COMEX over London.
Absolutely.
Yeah.
The question I get a lot from our clients is, do we buy physical gold or do we buy paper gold, right?
So I
think, my view is you should actually do both. If you want to do asset allocation on a longer term basis and when you want to hold gold, you want to hold physical gold. But of course there is a cost to holding physical gold, right? The custodian cost, the storage cost. But if you want to be trading in and out, if you want to make like a quick 10, 12, 15% because you think that, demand is going to spike up over the next 3 months, then I think paper gold actually does that well as well. But you have to be careful because some of the ETFs on gold are not backed by gold. You got to make that distinction very clear.
Although there's arbitrage COMEX and London gold, right?
Absolutely.
Which is basically usually nothing, but now it's, at one point it blew out to, I think, $30, $40, no?
Absolutely. Absolutely.